Well, hello, everyone. Welcome to today's broadcast. Our broadcast today will be on Pillar 2, meeting the challenges with technology. What I'd like to do is introduce to you myself as well as our speakers. My name is Frank Angelieri. I'm a senior lead tax partner here. We also have John Modulewski, otherwise known as John Mod for short, who's in our ignition practice, and Chris Tofstenson, who is also a partner in our ignition practice as well. So what we'd like to start with is the fact that there's an impending reality that Pillar 2, the implementation is upon us right now. There are a number of potential effects on multinational companies and how they pull together their data associated with Pillar 2. What I'd like to do right now is, in effect, go through a quick overview of the agenda and highlight the challenges that are there in regards to data identification and gathering, framing the technology challenge presented by BEPS 2.0, Pillar 2, elaborating on the data gap issues, solution design, and implementation considerations, and examining the analysis modeling as part of the technology challenge. There are a number of things we need to consider in regards to Pillar 2, and it's not just an international tax matter. It's not just a gap matter. It's not just a technology matter. It's an everything matter. All these elements intersect with each other, and companies are concerned right now about the data challenges that in effect are upon them and will be upon them regarding Pillar 2 as it comes into fruition. With that being said, John, can you describe the Pillar 2 data gap issue that multinational companies are facing at this time?
Sure. And it largely stems from, as you were saying earlier, this data identification problem. And if I would start, right, I have, the visual we have on the screen is a great representation of what that is, aside from reading, the model rules to figure all these things out. This is the sample of the globe information return. And as you can see, right, there are a number of items in here and potentially, even on the next slide that are, this is highlighting this need to find within a company's systems a variety of data points and a variety of data adjustments to be able to be even to do your Pillar 2 analysis, and then to this stage, right, to do your Pillar 2 compliance. Now, right, some of these items with globe income, covered taxes items, and substance-based exclusion, these might be potentially readily found within ERP or internal accounting systems today. Right, but it's to the extent of what's that detail level, right? Say intragroup dividends, that might be a line on P&L, and we might be able to dig into that. But as you go down, to drill down another layer to make sure, well, what makes something excluded dividend that wouldn't feature in your financial accounting and income and loss? That can be a bit of a challenge on its own. And again, you might not find those things readily within the accounting systems. And then, of course, there's going to be almost new tracking altogether that, again, right, companies might not be expected to be ready to be dealing with today, right? And I'm just throw a couple examples out there, right? Tracking deferred tax liabilities that maybe don't reverse in 5 years. That can create issues for Pillar 2 that otherwise today teams might not really be looking at. There's also different ways in which to classify credits, right? When you're looking at tax credits, do they meet this qualified refundable tax credit concept or not? And if they don't, that would have a major impact on ETR, on top-up tax calculation. So there's a lot of challenges that companies are going to, face today.
So, John, as you mentioned, there's a number of data points, right? A number of, I would call it, series of data points necessary to compute globe, right? And companies are in the midst, or some companies are in the midst of implementing, say, a new ERP system. They may be in the midst of finance transformation. They may be in the midst of tax transformation, but there's transformative events that may be occurring within a company's operations or finance operations in regards to their ERP system. Do you feel that an approach is properly taken, that you could use an ERP system to, in effect, cure all your issues on the globe?
Frank, I wish I could tell you we could cure them all. with properly implemented ERP. You certainly can cure many, right? And where I was, one of the things that I was, as I was dovetailing from the last discussion about all these various data points, remember too, right? It's various entities within your organization, various countries, but do they roll into different business segments? How do we address that? And so, some of our clients have maybe they're lucky; they're on single systems. That's great if an acquisitive client has been, been picking up, entities along the way and is on disparate accounting systems. Again, that just increases the, so-called difficulty level of the dive, if you will. So, when you're doing and whether it's design work, whether you're taking a look at your data systems now to go through, a data gap analysis, some of the items of which, are on the screen here today, right? Things that you want to be thinking about is what other departments within, right, a company are you going to need to coordinate with in order to meet all of these needs, right? So, you might be going to HR when you're thinking about the substance-based exclusion and you're thinking about the carve out for payroll, right? Or maybe there's fixed asset systems internally to get you to your asset-based elements within there. Corporate transaction history might be held under a completely different part of the organization, and again require some not sophisticated, maybe sophisticated, but at least a thoughtful approach on how to identify, classify, and then in the future be able to process information as new transactions occur, right? There's a lot of different challenges there. And again, a single solve during an ERP implementation might not be able to get us the whole way. Just one final thought on this before I'd be interested in passing to my colleague Chris is, look, there's also going to have to be some flexibility in the system, right? In that we are starting to see countries pass these rules, EU directives pointing several other countries to pass them. But how these rules are implemented, the timeline they're implemented upon, and then how future guidance comes from OECD and other countries, these are all things that we're going to have to we're going to have to consider and revisit during the journey to ensure that our companies and clients are able to meet all of these demands.
Yeah, so John, what I take from that, and I kind of use this analogy, is that it's important that you're there as a company is evolving around with their ERP system, because you don't want to build a house and then have that to come back and in effect put in a basement. You want to be able to have that basement in first as the foundation and then build it from there. And that's going to be really important regarding any design work that occurs within an ERP system, especially if you're trying to get Pillar 2 information more efficiently and effectively.
Indeed.
So with that being said, Chris, so what are you hearing from clients in regards to how they're addressing challenges associated with what we call the data gaps?
Well, we're seeing a pattern emerge, which generally follows a few key steps as shown here. It starts with the initial assessment of exposure. So how is Pillar 2 going to affect us as an organization? And then you move to the data and platform gap analysis, as John described just a moment ago. So what is your overall state of readiness in terms of having the data at all? And is that data accessible? But what I would draw your attention to is the strategy element, that middle box there. And this is where there's a lot of discussion going on. There's no single solution or right answer for everyone. But as more and more organizations evaluate their options, as you mentioned earlier, Frank, connecting with the broader organizational efforts like finance transformation, system upgrades, is a great place to start and will likely save a lot of time in the end. But what is clear is many organizations are realizing they can't afford to wait given the requirements of Pillar 2. Sometimes it seems it's tax culture that when all else fails, you can just put all this on your back and strong arm it, right? But with Pillar 2, it's really on a whole different scale. And we have many companies realizing that you may end up with literally hundreds or literally thousands of Excel spreadsheets that would be just impossible to govern if you were not to take action now.
So Chris, what technology solutions are you seeing that companies are maybe implementing, thinking about I think a lot of companies are more thinking about than implementing right now, that could benefit them?
Yeah, it's really about sizing the solution to the size of the problem. If you're an organization that doesn't have significant international operations, you might benefit from a really good connected desktop model or the tax package approach. But we've seen lots of other approaches be very successful, like you mentioned earlier, ERP integration or standalone tax data platforms. But I will say this, Frank, that from a pure technology perspective, Pillar 2 represents a unique challenge because of the rate of change. Once all these jurisdictions implement Pillar 2, they may have small changes or special treatment that messes with good technology design. So, my best advice here on your question is definitely design for change. And you want to hard code as little as possible because not only will this change in the year of implementation, but may likely continue to change in the years forward.
So, Chris, we talk about technology. Tax departments generally handle tax depending upon the size of the company. We do have some companies that have very large technology departments within tax. But do you see tax as handling all the technology solutions on their own? Or do you see a combination of, say, IT or finance working together with tax in effect to come up with the right solution and managing the process?
Yeah, thanks, Frank. And my short answer is I think it's going to require both. And it's a really great point because one of the key takeaways here is that we're in a great time window to start thinking through all this and begin those conversations with IT. And often this is where the cost and investment discussions come in. And I'm often asked about the return on investment of tax technology or, let's say, hiring technology professionals in the tax department, as many are considering. What I would argue here is one of the primary drivers is the cost of alternatives. Pillar 2 isn't optional. So it's really about comparing the total cost of ownership of the various options. After all, you have to choose something here, and even doing things manually is still going to have a cost.
So when we talked about technology, and there naturally is a process, right? And there's people involved with that process. And those individuals could be within the company, they could be outside the company. What do you think about, how will companies in effect go about that?
Yeah, you may not be surprised that there's some pretty great technology out there. I've even been asked about some of the more modern stuff that we've all seen about OpenAI or even Chat GPT. But I think the real value is figuring out what is the best fit for a particular organization, which goes well beyond technology and into company culture. This is like how different departments interact. So this is who owns the data, who's going to do the validation, and what the maintenance model will be. After all this has to be sustainable because, another key point is Pillar 2 isn't going away anytime soon. So what I'll say here lastly is that when you realize all the various process interdependencies, there may be opportunities to combine and integrate in ways that benefit all departments. If you can get them to the table, especially the interaction between tax, accounting, and finance.
Yeah, so I guess the point we sometimes companies do get lost in technology. They feel that technology will cure everything, but it also takes good data, right? It also takes the data in effect that you have, right? That in effect is in effect part of the technology solution, and that data is going to be very important. And where that data sits is a good data, in effect, ultimately reach that goal to have a good globe return. Where you're efficient and you also are accurate in your calculations. So, John, let's go back to you. let's talk. Can we talk about the challenges associated with determining the Pillar Two related liability and identifying the jurisdictions that where we must collect these taxes?
Sure, right. I mean, it's been so much fun talking about the technology. You can almost forget a little bit that we got to, actually then do this kind of calculation you're just talking about, right? And so, the challenges I think that the modeling aspect of it present are this is this is ultimately going to be a patchwork of country level legislation, right? It's going to come online at different times, so effective dates are going to matter. There might be individual nuances as to how those rules come into effect. And so that's a potential, set of unevenness that any model is going to have to be ready to deal with potentially in a flexible way. From there, we're also going to be getting updated administrative guidance. And so the model just has to be expansive and flexible enough to address that change of things. And then from there, right, then we go back to all this technology, all the data tagging, all the locationing that we found. We said, okay, this exercise needs to be able to readily, as readily as possible, as easily as possible, take this tagged, take this sensitized data, right, and be able to address the calculation of things like globe income, covered taxes, substance-based carve-out, right? Where do you have top-up tax in any given jurisdiction? And then how is that going to be addressed in terms of the income inclusion rule, right? The UTPR, right, for under-taxed profits rule, or even, right, as we've talked about in other, presentations like this, qualified domestic minimum top-up tax, and how that might be the first thing in line, right? How is the modeling solution in a multi-jurisdictional way bringing all of these pieces together to give teams, a look at quarter on quarter, year on year, what's the potential liability, and then how does that interact with other elements, within the company structure?
So that's a mouthful in regards to just that. And I know we're not finished in regards to what else a company will need to pull together. So I know we have QDMTT. I laugh at myself sometimes. I'll say, pronounce that like 20 times in a row, QDMTT, QBMTT. Right. You get to the point where it starts making you dizzy, but there are so many things out there that are very relevant to companies that, other than that they have to look at. So what other thoughts do you have, John?
Right. Again, it's about, the one thing that I've found over time with modeling is about being able to keep things up to date, right? When you're in a fast moving area of, in this case, international tax law, right? The ability to stay on top of changes that are coming and being able to integrate those in a meaningful way into the analysis is of utmost importance, but also is a fair challenge in its own right. And then from there, right, modeling, there's elements of flexibility that I think any user of a model or any company looking at this analysis wants to consider. But the first is elections, right? Many tax regimes, and Pillar 2 is no different, allow companies to choose. Well, maybe I would elect to do the tax deduction for stock compensation adjustments instead of book, as an example, right? How do you in a model then be able to both have both of those sources of data and then be able to say toggle for it so that, like a scientist, I'm just changing one part of the experiment and let me see what kind of material change that has on the back end. And I also, I look at that in the same way for scenario planning, right? I mean, we talk about modeling and, a lot of times you're driving it, people just think about the base case, right? If I just get all my data in and I set everything the right way, this is where I am today, but where would I want to get to? And again, from a sensitivity analysis, how can I toggle, scenario plan, change financials, move things around? What could I be doing in an attempt to manage, right, coming top-up tax liability in various jurisdictions? Mind you, I've just been talking about some of the base calculations if you were just reading, say, the model rules. But of course, for the next several years, teams will also have the transitional country-by-country safe harbor, which will have a slightly different calculation base, but is absolutely worth diving into and understanding because it has the potential to simplify some of this back-end analysis. So again, when we look at a holistic way of looking at modeling, that is, these are all considerations that need to be taken into account.
So, John, are there any special challenges to U.S. multinationals?
Yes, indeed, there are. And in particular, I'm thinking about when it comes to GILTI, right? And in particular, how that as a blended CFC tax regime has to be accounted for to push back and get proper ETR calcs at various jurisdictions, right? This is going, this understanding that mechanism, having it be part of the, the overall modeling analysis, I think is absolutely crucial. I also think, when it comes, we'll have some things coming on the pipeline on corporate AMT as well in the U.S. It's kind of non-conformity with Pillar 2. How will that be addressed in the overall structure, right? I think, and all the we're not even doing that discussion today, right? But whatever the challenges are associated with corporate AMT are going to dovetail back into all of this. And so therefore, this again, when you talk about all of these things, right, think about the challenges this presents to companies. It's a lot of things to stay on top of. It's a lot of knowledge that's cross-functional. And if the modeling doesn't capture these things, unfortunately, right, there could be the risks of, material, misunderstanding as to where ultimate liabilities lie. So, again, with no part of what we've been talking about today lends itself to easy answers, but we are beginning to see and take on the challenges that it presents and work with, companies to meet those challenges.
Needless to say, just to maybe just summarize some of the thoughts that we presented today on this broadcast, the idea of a multidisciplinary team is going to be very important. It's going to be important not just to have an international tax person involved. It's going to be really important to have somebody who understands GAAP and also someone who understands where the data is and how do you efficiently pull that data together to, in effect, reach the ultimate goal of having a globe return that is accurate. We talk about a number of items here regarding data collection. We talk about the necessity to be there in the beginning when there are design is occurring in regards to a different ERP platform or other technologies that are being utilized. I think the most important thing is being there up front and being there collectively as a team to, in effect, compute your globe income. Well, thank you, John, and thank you, Chris. If you do have any questions regarding this broadcast, please reach out to your KPMG tax advisor for any questions or any needed assistance. Thank you.